Hey there. Welcome to the closing bell on the 7th of December. And I thought I'd follow on from last week's sort of training session, giving you a few ideas on how to think about trying to make money in individual stocks, how to manage your risk. And we had a great trade in Retirement Trader just recently, and I thought it would be a really good case study for you to understand uh, how to sort of look at a few different aspects from a technical point of view. And when they all marry together, they can really give you some solid trading opportunities if you understand what to look for. So I thought I'd have a look at De Grey mining today after the takeover from Northern Star, which saw the stock ramp higher to $1.90. We've been in that stock in Retirement Trader, well, for a couple of years. We initially bought it in August of 2022 under $1. And then actually we saw a buy signal just a couple of months ago. So I sent out another alert to new members and everyone there, raising the conviction level on the trade and raising the entry price to $1.30 to jump in. And only a couple of months later, it's now up at $1.90 after that takeover was lobbed. So really big gains very quickly and entering the stock without really ever being out of the money. So I wanted to take you through the thinking and the trades that occurred so you can see in action a little case study so you can understand a bit more about how to go about these things, maybe for yourself. All right, so let's have a look at how things happened in that stock. So I thought I'd start just to prove to you that I'm not pulling your leg. I know how skeptical everyone likes to be. So on the 31st of August 2022, sent out an alert to buy De Grey Mining, conviction levels, risk levels, and buying at market uh, up to a price of $1. So that was, I'll show you in a second, stop loss of 60 cents, an initial target of $1.29. So that's where people needed to take a third profit and adjust their stop loss to a break-even level. And then just a few months ago, 20th of September 2024, I wiped out one of the stocks that we went into. But you can see there, De Grey Mining, conviction level raised to 2 stars out of 3, and buying at a limit price raised to $1.30. And there was an 83-cent stop loss on that with $1.65 as the initial target on that trade, which was just released a couple of months ago. So that's just to show you the actual alerts that were sent out to people at the time. So let's have a look at the stock. And this is a monthly chart looking at De Grey Mining. And you can see just in the last little while, we've got that big gap up, the price trading up at $1.90 currently after that news came out. So we've got the takeover bid occurred. Now, just to give you a sense of where we actually went into the stock, we initially bought it in August of 2022. So that was all the way back there. And you can see how great that was as a initial entry point, never really out of the money. And then the initial target was up at $1.29. So when the price only a few months later rallied, that's where people sold a third of their position and then created a free option from that point, really, where we either break even or make money. So that was the first trade, and then we've held on ever since, and now are sitting on, nearly 100% gains on that position within a couple of years, having never been out of money on that position. And then we got another trade when the price, after a long correction, and the price took off to the upside, breaking out. I sent an alert there at $1.30 to buy. And only a couple of months later, again, never really out of the money on the position. And people who bought then were actually up about 50% in 3 weeks on that position. Um, People who got another chance to buy just a few weeks ago, you see the price sold off down to $1.30. exactly and then took off like a rocket. So some people, yeah, were up 50% in 3 weeks on that position. So how did we go about that? Why did that work? What were we looking at to make that trade work? And this is where I want you to get you thinking about these four different things that I'm going to be looking at. I'm looking at wave structure, I'm looking at the trend structure, I'm looking at distributions, and I'm also looking at those candles, which you can see there. The candle being the green bar or the red bar, which shows you the range over a whole month and where the price opened and closed. So it's got a green bar, open near the low, closed there near the high, and this red bar, I know that it opened up there and closed the month there. So that's how these bars work. So by combining all those four things, the wave structure, trend, distribution, and candles, I'm having a deeper understanding of what's going on. So I'll start with the trend. So we're looking at, as you can see there, that red line, 10-month exponential, 20-month simple is there, that blue line. And I look at the overlap of that for just a sense of trends. But you can see there when the price is just treading water, it can go back and forth. But the main thing to consider is I do a Bollinger Bands around that 20-month moving average. So that's like a fulcrum. I see that 20-month moving average. And the 1 and 2 standard deviation Bollinger Band below is sort of a sense of volatility and uh, a range sort of around that 20-month moving average. So I'm keeping an eye on that area when the price is trending up because you can have the price having the initial wave, but then you have corrections, right? Another wave, corrections. And I'm looking at those corrections around the 20-month and saying, well, how far can the correction go to the downside before I get interested? And I'm quite interested in that 1 to 2 standard deviation on the Bollinger Band below that 20-month moving average. So when I see prices sort of giving me buy signals out of there, I'm getting interested. So that's the first little thing. Uh, Second, looking at the wave structure. So we're considering prices trending higher. If I'm looking at waves like this, I'm saying uh, when prices are trending higher, that you get these, rallies, the main wave, you get the correction, get another wave, you get the correction, another rally, and you're looking at these waves and the corrections that they're doing. And, I can make calculations off that where I'm saying, right, well, if I'm looking at this wave here, I'm looking at the areas where reversals happen. So we're looking at the point of control, the midpoint of the wave as an important point. And also, of course, the buy zone there, 75 to 87% retracement, and the sell zone where I expect to see resistance. So we've got a range created. We're then looking at that range and saying, okay, that point of control is important. Can it bounce off there? If it doesn't do that, it'll probably fall into the buy zone area, which could create an opportunity. I'm also expecting that there could be resistance in that sell zone area. As you can see there, couldn't quite get through. Just so you're not getting fooled by things and knowing where reversals could occur. And also looking at that next wave, and we're doing the same and similar thing. Looking at the wave as it develops, the major part of that wave, I'm saying, right, we've got the point of control through there, midpoint, which price will probably oscillate around. We've got that buy zone area, the sell zone area, where I expect to see resistance. So you can see if we analyze this, prices bouncing off that point of control, resistance in the sell zone, selling off not quite to the buy zone, but you can see the idea. Sell zone again. So lots of oscillation in that range. And then you've got a final sell off into that buy zone area and it kicks higher. So I'm looking at those buy pivots, which is then moving on to, the candles. So you're combining all of these things together. So I'm looking at the major wave. I could see that. I could see the buy zone area there. I could see the reversal on a monthly basis. We're getting buy pivots. Okay, this is getting interesting. And so when prices really kicked higher, I had all of those things in place saying, well, watch out here. This could actually be ready to fly higher. So that's where we got that second opportunity. So we're looking at all of these things, the range, the wave structure, the trends, all sort of combining, and also looking at sort of distributions of price over time. So you can see we had this initial wave higher and then a correction. So then I'm looking at that correction and I'm saying, well, once a big correction like that happens, it could set up a period of range trading. And again, you're looking at the midpoint of that range as important, where prices can oscillate around. And I've told you before that when these ranges develop, you can have a range, a correction, and then if it does set up some sort of distribution or range trading period, can often have false breaks of either edge of the range, where you've got people stopping out of positions because people place their stoppies below and above, the extremities of a range. And after a period of oscillation in that range, including, those false breaks of either edge, which see prices revert back to the point of control. So you can have a period going like that, which can last a long time, then a final retest of that point of control, and then it makes that decision to bust out of the range to continue the upside momentum. So it's like upside momentum, consolidation phase, and next uh, rally. So if I'm looking at it from that point of view, I'm looking at this range like that, and I'll be talking about that MACD later. So I can then look at this structure as it develops, and I know that range is important. I'm seeing these false breaks, the attempted uh, attempt to leave the range, but then the gravitational pull of that point of control takes over. So that's where I'm looking at that and sort of expecting that's where stoppies go off. And if prices come back into the range, I'm waiting for signs of life, the buy pivots, etc. I'm expecting a move to the point of control and then possibly a rotation up to the top of the range. So you then sort of understanding as prices are going along and you're considering it rather than just thinking of up and down, you're thinking of these ranges, how they develop and how traders get shaken out of their positions. And obviously, if the price is going up, where's the best place to buy? Well, clearly, once a range has been set up, you're waiting for people to get stopped out and then buying when prices move back to the range. And look, prices could have taken off straight away from there. In the end, they didn't. They continued to, oscillate in the range. And you can see if we're looking at the buy zone within that range, I'm also looking at that and saying, right, well, that's sort of where I expect to see some reversals occurring, which you can see happening multiple times there. Also, even here, multiple times, just bouncing around in that range between the buy and sell zone. So then I'm looking for opportunities based on that as well. So you can see again, that time prices turning up there, uh, buy pivot, all the signs that I like to see, which is why we then jumped on once it started to turn up. And also from this point of view as well, same thing, waiting for major levels to get broken, lots of stop losses going off below there. If prices then turn up rapidly, I know, I'm not only am I buying in the buy zone, of this range, but I'm also buying it after the false break. We've got the green little diamond going off, monthly buy pivot, confirmation of some sort of reversal in a good spot. So I'm thinking my odds are on my side with this strong upside momentum that I'm going to at least see some sort of move to the point of control and possibly an oscillation up there. And you're going to use that opportunity to then take part profit, create the free call option, and try to make sure that your stop loss, your break-even stop loss is below the low of the whole range. Because below there, if prices did turn down, um, like this, and then it actually broke down below that low and got hammered, well, you don't really want to be in the stock, do you? Because then it could actually be on for a complete collapse. So by using this method of knowing about these points of control, the way prices oscillate, you're using that mean reversion probability to get yourself into these free call options where you're going to break even or make money, and you're making sure that you're pushing your average entry price down below the low of the whole structure so that uh, if you are stopped out for a break even, so when you get your capital back, you're definitely wrong. You want to make sure when you are finally stopped out that you're happy to walk away, that the price that hits is somewhere that says, wow, watch out. This whole thing may not be working out. So there you go. That gives you a bit of an overview of all of these different things we're looking at, the wave structure, trend, distributions of prices, the candles and how momentum changes, oscillations around the point of control. It's all there and in a pretty clear way. And there's a case study for you of it really in action and working out on the same stock 2 years apart, same strategy, and two great entry points. And finally, just looking at those MACDs, this is the moving average convergence divergence. And, I'm looking at the relationship between the 10-month exponential and that 20-month simple, giving you a sense of how strong the trend is. And this is what this line here is telling you, how strong the momentum is to the upside when the momentum's waning. So you've got the signal line you can see there, just giving you the sense once it's crossing, you're starting to say, well, watch out. You can see there, momentum really went bad. That was all negative. See it turning up there. That's when we actually got in. Rallying, momentum turned down there. There we go. Look at the big correction and then turning back up there. And again, lining up with where we got long the stock before it took off to the upside. So using that moving average convergence divergence can be useful. Both of our buy signals were actually sort of lined up with that MACD turning positive there. So look, there's lots of different things you can use, combining where you want a lot of things sort of ticking a box saying yes, 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 it's all saying go, and that's when you get your best trades. All right, well, I hope that was helpful. If not, you need to learn a bit more about what I'm doing, please click below the video. You'll see the lessons there. Have a read through that. It's a really solid document of 6 different key things I've learned over the years. I think you'll learn a lot by reading it. So check that out, and I shall come back with more next week.